So we had Fed Chair Yellen out with testimony yesterday, and this proved more dovish on the margin than expected. There's been a bit of a hawkish tilt, at least in the June FOMC meeting, we feel, and many people searching around for the reason for Fed hawkishness given the rather low inflation rates and a few signs of concern here and there in the economy. And one of those concerns was financial stability. Maybe the Fed is looking at financial stability and wants credit conditions to tighten a little bit, and expecting the economy will come back a little bit and justify the current rate outlook. What we saw from Yellen yesterday was really no mention of the financial stability concerns and a little bit more cautious rhetoric on inflation. This really looked dovish relative to recent Fed rhetoric, and the dollar weakened. It encouraged bond markets to consolidate, so we saw dollar yen hit a bit by that trade, and we saw carry trades, importantly this sort of so-called Goldilocks trade, the less hawkish Fed, meaning that the risk appetite can feel free to put on more risk. And we saw emerging market trades and commodity currencies performing strongly on the back of this rather dovish testimony. Interestingly, Eurodollar has corrected a bit. I think a little bit of that is simply profit taking. There's little to drive the ECB view much higher from here in terms of rate outlook, et cetera. I think the focus is shifting instead to these more risky trades, as we mentioned, carry trades, et cetera. So I think that's going to be the outlook for the next week to 10 days, maybe even a bit longer, that we see this putting back on carry trades, putting on risk trades versus the dollar, maybe even versus the euro to a degree, eventually the yen finding resistance as well. It's not going to be a popular currency if interest rates are flat and if risk is very much on at the moment. So I think a rather key testimony. It sort of sets up a waiting period for the next round of data, the next round of what we're going to see from the July meeting from the FOMC, and how the market deals with the so-called quantitative tightening or unwinding of the Fed balance sheet that is probably set for September, and that's some ways off. So that's the lay of the land here after Fed Chair Yellen's testimony.